Hello, folks. It's been a while. I've been away, and I think I've had a very busy schedule in the last 1 month. That's the reason I've not been very consistent right here with you guys. But thank God we're back today, and we're gonna get started with proper, back-to-back analysis this month of May. And hopefully you guys can make a lot of money this month of May. I'm wishing every one of you a very prosperous trading month. Okay, so today I want to teach a very important concept, very powerful, and I truly believe if you learn this, it's going to significantly improve your approach to trading, because what I'm about to show you, the topic is relative strength index of a currency pair. What this helps you do is that it helps you find out which currency pair is going to be more volatile during the trading week or during the trading day that you're trading, rather than just getting into a trade that's not going to move. Because sometimes as traders, you have these experiences where you are on a trade, you've done your analysis, you've done your top-down analysis, you've picked a currency pair, and you've got to the point of execution. You've executed on that currency pair, then all of a sudden you discover that that currency pair is not moving anywhere. It's neither buying nor selling. It will rather just consolidate, within a small range for a long period of time. And at the end of the day, you end up losing on that trade, or most times, the trade takes so long that you give up on that trade. So we're trying to find out how to avoid these experiences in your trading as traders, and how to do that is to understand the concept of using relative strength index or the relative strength meter to measure which currency pair is going to be performing better this trading week, or which currency pair is going to be performing better during the trading day that you're trading. So when you use this and you pick out this currency pair, you will notice that your trading is going to go very smoothly. Okay, so thank God for some platforms these days that helps us identify, helps us measure this relative strength meter of currency pairs and shows us which currencies are going to be performing better. Then when you pick up a stronger currency and match it up with a weaker currency, it gives you an effective currency pair. All right, because two strong currencies cannot deliver better, because imagine you have a strong dollar, a strong GBP. They're not going to go anywhere. One of them has to show strength, the other has to show weakness. Just then the other can lead the other in a given direction. Okay, so for example, if you have, because when you say you are buying Euro USD, for example, let's do it this way. If you're buying Euro USD, for example, what this literally means is that you're buying the euro and selling the dollar, because the euro is leading while the dollar is weak. That's what you're saying. When you are selling Euro USD, what you are saying is that, you are selling the euro and you're buying the dollar. That's what it means. It means the dollar is gaining strength over the euro. That's what it means. So you must find out two strong currencies cannot do better. When the euro is strong and the dollar is strong, they will most likely consolidate for a long period of time. They'll keep consolidating until the other accumulates more contracts above the other, so that it's going to lead the other in a given direction. Okay, so how to know how to avoid being in a market where it's going to lead you into a long period of consolidation is by using the relative strength meter on Finviz, finviz.com. So you just go to your browser and you search finviz.com, finviz.com/forex performance. Okay, so once you just go to the Finviz website, you're going to go to click on forex, click on performance, and by the right here you would see the time frame. So you select, for example, on the weekly time frame, it's going to show you the currency pairs that are performing this week and how they are performing. Then your only responsibility here is to pick up a strong currency by the left and match it up with the weakest currency by the right, That way you have an effective currency pair that's going to deliver better during the week. All right, so during the just concluded week, we saw that the AUD has the strongest strength of about 0.79%, while the JPY was the weakest currency. And when you merge up AUD and JPY, you're going to have AUD JPY as the leading currency for last week's trading performance. AUD JPY performed better than most of these currencies. The second currency after AUD is the Canadian dollar, with about 0.26% strength. When you pick up Canadian dollar and merge it up with the JPY, you see that the JPY has the weakest. You're going to have CAD JPY. CAD JPY was the second in performance in terms of leading performance over other currencies. I'm going to show you that on the chart. Just follow what I'm about to show you right now. Then the next is CHF. When you merge it up with JPY, you have CHF JPY. And you also see that these currencies were leading in performance. The dollar, you can see the dollar the dollar was not as stronger as the CHF or Canadian or the AUD. GBP, NZD, Euro, and JPY, all of these currencies were very, very weak. And the dollar also is tending towards the weak side. The dollar was also showing weakness. The dollar wasn't showing strength. Imagine if the dollar was leading, the dollar was very strong. I will be glad to trade currency like the currency pair like USD JPY if the dollar was showing strength, but the dollar obviously was weaker than these currencies, weaker than the AUD, Canadian dollar, and CHF, Swiss franc, right? So I'll rather trade AUD JPY, Canadian dollar, and JPY, or the CHF JPY over the USD JPY, over GBP USD, over NZD USD, because yeah, obviously showing almost the same thing. Weakness over these currencies, and the dollar also is not as strong as we want to see. Guys, this is how to measure the relative performance of currencies across board over a given period of a week or a day. When you just click here, it's going to show you for the trading day that you're trading. Once you wake up in the morning, you're going to see what currency pair has the best performance. And on Friday, I think we saw AUD followed by NZD followed by CHF followed by Canadian dollar, and the GBP was showing weakness, the dollar was showing weakness. So AUD USD was traded better, performed better. NZD USD performed better. You see that GBP AUD performed better as well. You see that GBP what's the other currency I wanted to talk about? So this is how to pick out the most effective currency or the currency pair that's going to perform better during your trading week and during the trading day. Okay, so once you succeed in doing this, you've seen that last week we outlined that AUD JPY would do better, CAD JPY would do better, CHF JPY, these three currency pairs would do better than USD, JPY, GBP USD, and all these currencies. So let's go to trading view, and let's check this currency pair, the three currencies pair, AUD JPY, JPY, and CHF JPY. Let's see their performance last week. So I'm going to start with AUD JPY, and I'm going to show you how these currencies performed last week. Look at the price delivery on AUD JPY last week. This guy delivered hundreds of pips. This was on Sunday, Sunday market open. Monday price, this was part of three concept: accumulation, manipulating retail to take sales, while price action actually traded into the bullish breaker by the left here. Take a look at it here by the left, that bullish breaker. Price traded into it again, because price took out the low, created shift of market structure bullish here. Price traded back into that level, also trading into the rejection block. And look at the massive price delivery on Tuesday going into Friday on AUD JPY. This guy delivered over 280 pips. Very smooth price delivery, 280 pips. This guy wasn't struggling to move because we've seen on Finviz that it has a tendency to do better in performance, followed by Canadian dollar and JPY. That is JPY. So let's check JPY. JPY also delivered better last week. Let's take a look. Do you see JPY as well delivered almost the same, over 200 pips in price delivery? JPY delivered over 285 pips during the course of the week between Tuesday, Wednesday, and Thursday. This guy delivered over 280 pips as well. This is very interesting. So imagine that you were on a currency pair that is not going to do better. If you take a look at the daily time frame, it was a very sweet price action. Price had created a bullish breaker. You see that bullish breaker there? Price traded back into the breaker on Tuesday, and that bullish order block right there with a fair value gap, specifically that fair value, because the most valid order block is the order block that has a fair value attached to it. So if I was looking at this on Monday and I've seen price action had created a very good, sweet pattern where price has swept the low, liquidity below, created shift of structure bullish, and we have an internal range fair value gap right below on the daily time frame. You see that tiny fair value right there, that tiny fair value right there, that is confluencing with the bullish order block. Look at on Monday, price opened, but Tuesday we traded into that fair value. That is a buy for me. Where's the drawn liquidity? Drawn liquidity is going to be above that old high right there. Just right there. You see that? So price has delivered amazingly over 280 pips in price action from Tuesday going into Thursday. Look at the 1 hour time frame. Price took a liquidity right there, traded into that fair value gap. So price took a liquidity below that relative lows and created a confirmatory signature right here, created another shift of market structure bullish, creating another bullish breaker on the 1 hour. That's a model for us. I'm sure the guys on the mentorship community understand how to use this model. And guys, look at this. That's a very good entry into the drawn liquidity. Very amazing. What is the next currency that we've seen would perform better? CHF JPY. So let's take a look at CHF JPY. CHF JPY. I'm sure CHF JPY also would do better. So look at CHF JPY daily time frame. This guy had just traded into the internal range bullish order block right here on what is. So price traded into that bullish order block, and we saw price created another bullish order block that is called propulsion candle. So during the new week on Monday, price traded back into that bullish order block on the daily time frame. That's it. We will seek for confirmatory signature on the 1 hour. And once we see that, so price traded into that bullish order block on the daily time frame, and guess what happened? Sorry guys, I think this is that area. Let's mark out our bullish order block right there. So price traded into that bullish order block right there, and if you check the 1 hour, you'd see clearly that we have a breaker. Price had traded, took a liquidity below that low, created shift of market structure bullish. That's a bullish breaker. At the same time, that daily time frame bullish order block, we traded back into that level right there, and price created another shift of market structure, bullish. Price created shift of market structure bullish. Right there, shift of market structure bullish, and price traded back into the bullish breaker right there. That's another entry on Swiss franc, and we traded into the drawn liquidity above. All right, so let's look at currencies that we're not going to do better. So currencies like the GBP JPY. Let's check GBP JPY. I'm sure they are not going to do as well as the other currencies. Okay, so take a look at GBP JPY. GBP JPY opened on Monday, and on Tuesday just tapped into that that area of mitigation on Tuesday or Wednesday. Then look at what price delivered on GBP JPY. So you can see clearly it was just one candle that moved on GBP JPY, and it was on Thursday. What happened to Monday, Tuesday, and Wednesday? This guy was not moving because we've seen from Finviz that the currencies that are going to perform better are the AUD JPY, CAD JPY, and CHF JPY. My friends, this is how to pick out the most volatile currency to trade during the course of the week and during the course of your trading day. So as the market opens on Monday, we're going to be looking at Finviz to look out for what currencies are going to be doing better during the week and as well during the day that we're trading. Then we use this to select the currency to trade for the day, and then we employ our knowledge of top-down analysis. Let's do a top-down analysis on our usual or regular currencies to trade, starting from the monthly, weekly, and the daily time frame. We're going to be starting with the dollar index because the dollar index, of course, like you always know, the dollar index is the benchmark asset for all the dollar and the dollar associated currency. And going by that, it's important that you know what's happening on the higher time frame, because the higher time frame is the main driver of liquidity. Those of you who've been following my analysis for quite a while, you've seen how we've accurately predicted the dollar to trade into that fair value below the relative lows right here as the drawn liquidity, and as you can see, price is showing some level of very good reaction at the fair value right there, the tiny fair value below the relative drawn liquidity here. These things are not guesswork. They are not guesswork. They're actually a product of a long period of time invested in learning, practice, teaching as well. Helps us to learn better. When you teach the things that you're learning, it gives you a brighter insight about the subject that you're teaching. So when you look at us analyze the currency pair and say we're anticipating it to get to this point and gets to point A, get to point B, get to point B, we are not always accurate 100% of the times, but most times we get it right because we've been doing this for quite some time. So those of you who are struggling and sometimes you feel like giving up, why am I getting it wrong? When I do analysis, it ends up sometimes it hits me on a stop loss and trades into the take profit. A lot of you are having that experiences and you're at the point of even trying to give up. My friends, I'm here to encourage you. Giving up is the last thing you should ever think of doing in trading. All right? Trading can truly change your life. How will you know that? Just look at the people who trading has changed their life and hold on to their testimonials, also praying and hoping that yours is going to come as fast as possible while you're working, while you're studying, while you're practicing. These are the three things you should do. All right, those of you who are losing money because of ignorance or the absence of mentorship, please, I'm counseling you, stop losing money. Sometimes we hear testimonials. I heard a testimonial from one of our students the other day who had lost over 700,000 pounds in trading. 700,000 pounds to trading. And I'm wondering, why did this person have to wait to lose this money before you finally acknowledge that you could do better by learning, by leveraging on the wisdom of others who have paid the price to learn? You leverage on their wisdom and save yourself the risks of losing so much money. A lot of you even have the money to pay for mentorship, but you guess what some of you are doing? Some of you would rather say, I need to trade this money and make profit than pay for mentorship. Then guess what usually happens? People lose the money. Then you come back to the same mentor begging and saying that I lost my money trying to flip it, then pay. All these things are dramatic. It's not necessary. Okay? It's not necessary. You need a proven mentor who can show you what he's doing. I'm going to show you what we do on the one-on-one mentorship community. This is it's a very private group on WhatsApp for one-on-one mentorship students. We are very few here, but you can see clearly how students are engaging in the WhatsApp. Students are dropping their trades, dropping their analysis. I'm looking at what they are doing as well. Where I need to comment, I drop a comment. Where I need to watch, I watch. And sometimes it amazes me how the performance of these traders have escalated. And sometimes I feel like, whoa, these traders are doing amazingly well. And guess what? From just signing up, they are all here happily trading, and they are happily engaging in conversations with the rest of the guys. Okay, those of you who are not in my Telegram community, please check the link on the description of the video and make sure you sign up to this Telegram community. It's my private Telegram community, my public Telegram community rather, and you're going to be getting a lot of, you will get to see what is happening in there, in the Telegram community, insightful content, educating content as well, very important. So those of you who are looking to join me on the one-on-one mentorship program, just make sure you click the link on the description of the video, send me a DM, let me sign you up. Today is weekend, so you will most likely get a discount because it's weekend. Okay, don't let yourself enjoy yourself so much that you can't even recover, talk more of getting into mentorship. So you look at the dollar index, and two things are very important for you when you are looking at the dollar index: determining the current order flow and determining the next drawn liquidity. Okay, and determining the next drawn liquidity. These are two things that are very important for you when you are looking at the dollar index, from a higher time frame point of view. You need to study what the current order flow is, and to do that you simply just need to study the candles on the monthly time frame. Are they taking out the lows and respecting the highs, or are they taking out the highs and respecting the lows? That way you know that you are either in a bearish order flow when they are consecutively taking out the lows, like we see here. We clearly know that we're in a bearish order flow, and price just reacted of a fair value gap right here, and most likely what that means is that we might see price action reprice into internal range just a little bit, then sell again into the next drawn liquidity. The dollar is bearish as far as I'm concerned. From a monthly time frame perspective, we're looking at the bearish dollar. And when you look at the current candle right now, this monthly candle, when you put up a cursor on it, you would see that the opening price for this candle is 99.654. So when you pick up a horizontal line and put it up on the candle and check the coordinates to 99.654 right there, it will then give us an opportunity to sell above the candle opening price. All right, we're going to be selling above the candle opening price, just like it has happened with all the other candles. You can see this candle open, we sold above the opening price and we sold bearish. That's the same way we're going to be selling above this candle opening price. You go to the weekly time frame and you're looking to see, point of retracement, expansions or retracement. Clearly we just expanded and traded into external range lows here. We want to see the dollar trade into internal range fair value here before we sell again into the next drawn liquidity. I am seeing some level of drawn liquidity, that old low there. And do you see relative equal lows here? The relative equal lows by the left here is the next drawn liquidity for me once we trade into that internal range. And if you also look at the daily time frame and measure the entire range, ruling out premium and discount, remember we sell a premium market and we buy a discount market. So put up your Fibonacci from that high to the low. We want to see this guy trade above 50%, and coincidentally we have a fair value gap above that 50%. That's the point we're looking to sell. I'm looking to sell when I see the dollar trade into that fair value above that 50%, that equilibrium point. Okay, so what do we see on the dollar on the daily time frame? Yes, the dollar is going to buy into this level before we sell. Why did I say that? We had a failure swing on the dollar and a shift in market structure bullish. We had this analysis last week in the mentorship community where I told them clearly that I want to see the dollar trade into this bullish order block with a fair value gap on the daily time frame. then we buy into this area. Looking at the new day opening gap right there, we want to see the dollar trade into that level. Then we look for confirmatory signature to sell the dollar into those areas we have outlined. So throughout last week, we saw power of three concept played out on the dollar: accumulation, manipulation, then price action distributed into the drawn liquidity residing above those highs there, and ended up the week trading into that daily time frame order block, and has shown confirmation that it's going to go bullish. We're looking at that gap right there, that vacuum gap as the drawn liquidity. We want to see this guy trade into that level, or also above that level. There's also another fair value right there. This is what I'm looking at on the dollar index. Okay, so going into the new week, we want to see the dollar open. If the dollar opens on Monday and shows some retracement into either the bullish order block here, the sell candle that was traded through by consecutive buy candles, once the dollar trades into that level and gives us a 15 minutes confirmation, we buy the dollar. Or maybe it trades into that discount fair value gap right here, trades into that level, then we buy the dollar into those area while we're preparing to also sell the dollar. So that will be all for today. I really hope that you enjoyed today's lesson. If you do, please drop a comment on the comment section, and make sure you like the video, subscribe to my YouTube handle for more content. Until next time, I wish you good luck, good trading, stay safe.